Hello friends, welcome to this October edition of Monthly Viewpoints. Globally, equity markets took a breather in September due to the increasing uncertainty in the global macro backdrop. An uptick in crude oil prices, rising bond yields in the US, and a stronger dollar has dampened market sentiment. Interest rates are expected to be higher for longer. The Fed in its latest meeting put interest rates on hold. However, it is indicated that it is open to raising rates depending on the incoming data. The quantum of rate cuts next year has been lower, and the timing of the rate cuts has also been pushed out to Q3, Q4. Indian equity markets, though, performed relatively better in September, with mid and small caps outperforming large caps. Year to date, mid and small caps have outperformed Nifty by almost 15%. The key reason is that the economic environment in India continues to be resilient, as demonstrated by high frequency indicators such as GST collections, the PMI numbers, credit growth, and the e-way bill collections. The key positive news for India has been the inclusion in the JP Morgan Bond Index. This is a positive as far as flows and the rupee are concerned. Of course, the key risk for India continues to be the uncertainty in the global macros, especially the rising crude oil prices. Coming to earnings, the Q2 earnings season starts next week, and we expect the Nifty 50 earnings growth to be strong. For the FY23 to FY25 period, we expect earnings CAGR to be around 15%, driven mainly by sectors like banking and financial services, automotive, and consumption. In terms of flows, the domestic flows continues to be strong. However, we saw that there was a dip in the FII flows, and we saw an outflow of $1.8 billion in September. However, calendar year to date, India has got an inflow of $15 billion, which is the highest amongst emerging markets. Now, going forward, our recommendation is that investors should continue to maintain the equity exposure at the median level. Given the rally in mid and small caps and the consistent flows that have come into this space, we are seeing that there is some exuberance. Relative to that, the valuation in large caps looks relatively attractive, and hence we recommend that investors should have a tilt towards large cap in their portfolios going forward. Now, given moderate return expectations from equity and the fact that interest rates are on the higher side, returns from fixed income are also quite reasonable. Hence, it is recommended that investors follow a multi-asset allocation approach with exposure to equity, fixed income, and gold in their portfolio. In terms of themes, we continue to be positive on the domestic focused themes such as banking and financial services, discretionary consumption, and domestic manufacturing relative to global cyclicals. We provide a basket of funds for investors to choose from. Thank you and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।